everyone! It's here! Wow! One of my best stocks is down over 17%. No! Welcome back to Strongman Personal Finance. Enphase, baby. Me, Kevin. What happened, bro? Looks like you're getting your cheeks clapped. So Enphase Energy, which of course is very popular with retail because solar panels, microinverters, it's the future, bro, just got absolutely horrendously shellacked. That's right, ladies and gentlemen. This stock has been annihilated, down 64% year to date. Now, why was this stock popular? Because it went up a lot. That's right. Everybody loved Enphase, which makes freaking solar panels. The future, bro. Because it went up a lot. And what happens to a lot of growth stocks that suddenly stop growing like people expect them to? They get shellacked. And now we're down 64% year to date. And I know a lot of you clowns, including me, probably bought it somewhere in here. Anyway, I just want to remind y'all that Meet Kevin's PP ETF, which is such an amazing ETF, you know, it's better than VT, it's better than everything else with a 0.77 expense ratio or whatever, something like that, is a highly concentrated turd. He's got 25% in Tesla, 13% in Enphase Energy. That's right. What do you think's about to happen to Meet Kevin's PP? It's about to deflate like a balloon. Pop! So, let's go ahead and dive into the earnings. I was browsing a little bit, you know, just get a feel for this company, okay? They make solar panels. Oh my God, it's so disruptive, okay? So here's their earnings release, which came out today, which is why the stock's down. We reported quarterly revenue of $551 million, along with 48% non-GAAP. Why are we doing this? Why are we doing non-GAAP here? Gross margin. So they had $551 million of revenue in the third quarter. Let's look at the third quarter from the prior year. What was their revenue? Q3 prior year. 634. Their revenue's going down now by a massive degree. That's not good. Okay. GAAP gross margin of 47%. How does that compare to prior gross margins? Well, their gross margin has gone up. I'll give them credit for that. Okay, so they're improving their profitability, but their revenue is absolutely tanking. This is a company that was probably priced to grow at, who freaking knows, insane amounts. And now their revenue is absolutely collapsing. I don't know if it's inflation and people don't want to invest or buy solar panels. People can't finance it anymore. I don't know what's going on, but something is definitely destroying the sales of these companies, of this company. GAAP operating income. So they're still profitable. They still have positive operating income, and they still have positive net income, so that's good. And they have free cash flow with cash and cash equivalents of $1.78 billion. So they're not going out of business probably tomorrow, okay? They're probably going to be fine in the short term. But this is not good. I mean, look at the revenue. Look at the revenue. Q3 2022, 634. Q2 2023, 711. Q3 2023, 551. Their earnings per share is down a little bit from last year, and it's way down from the prior quarter. Woo-wee! Okay? And here's their explanation. Due to macroeconomic conditions, our revenue in the United States decreased 16%. Our revenue in Europa decreased 34% due to high inventory at our distribution partners along with softening in demand. The Netherlands, and Deutsches Reich. That's right. Europe shellacked this company. Massive decrease. But it's not even just Europe. It's the United States, too. I mean, U.S. stocks, bro. It's getting absolutely destroyed, okay? Now, funny enough, so their revenue's collapsing. And they're like, well, what should we do? What are the clowns going to like? Well, in July of 2023, our board of directors approved a share repurchase program. Up to $1 billion of shares of our common stock. Okay, so you're running into trouble. You have softening demand. And now you're like, oh, let's buy some shares back, okay? They repurchased 846 common shares at a price of $129. What is it now, 79? Wow! Now, let's see, capital expenditures, microinverters. So here, there was somewhere on here. Here is where the real destruction comes in. Oh my God, this is like horrific, okay? For the fourth quarter, this is next quarter, Enphase estimates both GAAP real and non-GAAP cloud financial results. Revenue to be within a range of $300 million to $350 million. Now, if we look at Q4 of last year, their revenue, oh my God. So Q4 of last year, they recorded revenue of $724 million. Their revenue has dropped by half, by 50%. Oh, God, this is nuclear annihilation. I mean, at least they still have positive gross margin. Okay, wow. But this is absolute destruction. This is why you don't invest in things like PPETF. Pricing power, wow! With Tesla and Enphase. This ETF is about to get freaking wrecked, dude. NVIDIA. Oh, me, Kevin. You know, I love you. I guess Intel might make up for it. Intel went up a little bit. But, Kevin, you're getting annihilated, dude. Why? 13% in Enphase? This is what happens when you buy growth stocks, bro. Growth stocks. They look very I mean, look at Enphase. They look very profitable. They have amazing revenue growth. Like, everything looks great, right? And then suddenly it slows down, and all of a sudden, you get wrecked. So if you had just looked at the financials of Enphase, it looks fantastic. The financials look fantastic. But there's more to investing. It is about the future. And you got to really understand what's going on in the market before you start playing around with individual stocks, okay? So that's my assessment of Enphase. Absolute nuclear annihilation. This thing, I don't know where the bottom is. I don't want to tell you what I think the bottom is. It ain't looking good. I mean, what are the ratios? Price to sales, price to books of 13, I mean, maybe at some point it'll be a buy. I'm not going to tell you when, but horrific earnings. Juice.